a lot of news this week. BOE, I think RBA. We have some economic releases as well. So I just want to start off with euro pound because if you recall last week, the euro was much weaker than the pound. That's how we got this decline last week because of uncertainty of the French snap elections that are coming up. So things are starting to shift here. We had a nice little reversal day on Friday. I'm not saying it is a bottom. I'm saying it is bottoming. Okay, so you had a very nice divergence between this low. Then we had a little bounce, waiting for my RSI to pop up here. There you go. So you could see at the lows that we had on Friday was a nice little divergence over 30. So the question is, is this it? Can we get a third? Can we pull back to, 84.20 and put in low right shoulder? But it looks to me like we're going to at least retrace back to the breakdown. The 2-week reversal will be 84.90. That means by Friday for over 84.90, we have a reversal. So that changes the picture, and it's, exactly the opposite of what it was last week. You have the euro up 14 with the cable down 20. Okay, so that's what's turning it. I believe that the euro is a contrarian buy. If you look at the daily, where we stopped was at 78.6, back is 106.67. Friday's low was 106.67. Okay, so we hit right around the 78.6 back. We have an inside day. I'm not saying we can't retest it, but I'd be buying any dips here with stops under 106. So it's not going to be a tremendous risk to buy it on weakness. A lot of people, it's really a contrarian buy because of the political uncertainty with the snap elections coming in France. So most people don't, it's a no touch to them because of it. And sometimes when markets are a no touch, means you should be grabbing it with both hands because there's fear to go ahead and buy it. Not saying that it's going to work because people are avoiding it, but it tells me I don't have a lot of company wanting to get long the euro. A couple of weeks ago, I talked about down here that we could still have a rally back to 105.50. Last week, we had two rallies very close to it. Let me go to a little shorter term chart. So we had, the 105.40 and then 45, which is close enough for government work. And then we had the CPI, we had the big break in the dollar before Powell came back to push, to push back against the good CPI number and for people not to get ahead themselves looking for a lot of Fed cuts coming. Now we're back to pricing in one. So this dollar index, I think, is a decent risk to reward. A lot of the funds are coming back to the long side, but you're wrong over this double top at 106.50. So as close as you could get short to 106.50 with stops above is the right play. If we fail from here, I'm still looking for 102.5, which would be a measured move from where we're at. If we got to, I had equality, this was 250, so we get 250 from here, it's 102, 102.5. So that's the way I'm looking at the dollar. Gold and silver are lower, and they were 20. You really need the, the fortitude of and patience of Job with the way it's been trading. You had this was a big down day when the news broke that China didn't buy gold that month. And then like last week, we're down 25, we're up 25, and now down 9, trying to fight its way back. You would think a weaker dollar would be supportive and maybe the correction's over. But last Friday, the shares didn't do much when gold was up $25. And here you go, you have GDX lower again. So, I'm still thinking that patients will pay and that there'll be a chance to buy between halfway back, which is 31.5, and 61.8 back is 30.18, which is pretty close to this 200-day moving average. I would definitely probe alongside of gold shares there. So that's what we have going on here in GDX, that this is correction, which, something I talked about in the metals, even talked about 28.5 silver, which we almost got to last week. Here's your low, was 28.66. Uh, Silver looks vulnerable if it gets through last week's lows. We'll see what it has left in it. Or perhaps this is it and the correction's over. Here's drive one, here's drive two, and maybe we're on our way. So, I have to take my cues from what's happening in the shares, and the shares are saying be patient, even with the physical here. Taking a look at yields, they're fighting their way back a bit. They followed through with, even though Powell pushed back, yields made a very nice decline. When I was with you on Monday, we were up here. Okay, and I said I still think that we're destined for lower levels. So that was here. Okay, so we pushed up after taking out this 430 level, 445, and we're trying to fight our way back. I don't think this is a bottom. In fact, I'll make a big call on yields here. Again, say the 460 level, that when you look at the weekly here, that we're on the verge of a major breakdown. If you have equality here, that's going to take you back towards these levels, the 350 level, maybe even 3. So I think yields are headed lower, despite what Paul was saying. I talked to a lot of experts. I think they think the Fed leads. I think the Fed is bipolar, and when yields are dropping, like, they may push back, but if yields keep dropping, they'll say it's justified. If yields start to head up, they'll say, well, it's justified. So I just think that we're on the verge of a major breakdown in yields under last week's low, and that was about 420. So, I think we're going to attack this low, and we're going to have something like this from here, with it maybe becoming even more extreme. I think what could drive that most likely would be some type of risk off, though I'm not ready to short S&Ps yet. It's very important to pay attention. We have an options expiration week. We also have the end of spring and the beginning of summer. We have the solstice this week. And so there's a lot of things coming together here. W.D. Gann said, pay attention to the change of seasons. At times it could mark the end of a trend. So perhaps that's how the dollar peaks out here, trying to hold up, is going to be into this summer solstice and options, and can I throw in a full moon on top of it? So there's quite a combo for potential turning points later in the week. So whatever you do now, just put on partials, and if you still believe in the trade and the market isn't really hurting you from anything you put on, it's an add-on at that time. So that's what's happening with yields. I still think they're headed lower. Some of my preferred shorts, I'm not sure if we're going to achieve it. If one has a chance, it would most likely be Amazon. But here's the Dow. There's the S&Ps making new all-time highs. And here's the Dow. So let me go to a 4. It's more obvious. So here's the Dow down here. Here's the S&Ps attempting to make new highs. This looks kind of like a sideways consolidation pattern, unless we start taking out some of these moving averages. That's down around 53.80. That's about 40 handles from here. For the S&Ps to reverse, here's the weekly off number. It's pretty far down there. It's here at 53.44. So that's about 80 handles lower than where we are currently. and talking about that my short candidates, I'm not sure if they're going to get to targets, but here it was. Remember I said S&P is making new highs and the Dow rallying back to say 3950, 39,600 with an outside chance of it giving us a 3 drive to a top formation, which would be probing above this high. Be pretty classic. So we'll see if that develops. I don't know if that could develop in 3, 4 days. The other one I was looking for, and it's interesting, despite the lower yields that we've had, uh, the banks are not making any hay out of it. This was another potential 3 drive to a top formation, but we have to get back over 42. It's not that far away. I don't know if there are bank earnings or not, but that we need another like $2 rally there. And what's sitting on major support right now is the KRE, and this 45 level is important. It's a $9 formation, so that would take it back beneath the October low. And it's not getting a lot of press or a lot of heyday, but the regional banks look pretty lousy to me. This was the weekly. This was SVB Bank. And with the huge parabolic gains in most stock indices, all we did was rally back to resistance and the breakdown and starting to roll over again. That's not a great sign. And XLF is not making new highs like with the S&Ps last week. So we'll look at that. Bitcoin looking pretty heavy. This could be a failing rally. I think 40,000 is possible. And if you're long the market, it might give you a little pause. It's a kind of a beta instrument about liquidity. And I'm not sure if we're going to be able to see the market keep marching higher with Bitcoin under pressure. So this is your weekly, and here's where some of the moving averages come in. Maybe this is A, B, C, or 1, 2, 3. Doesn't look that great to me. And I think that's about all I'm looking to cover here right now. So the takeaway is look for turns in EG, okay, which can lead to a turn in EURUSD. We have the BOE meeting this week, and most expectations are for them to do nothing. And if you recall, before we did this, I was looking for 2620 as a possibility before we had this big move in cable and the dollar rallied to 105.50 to 104 and now back to 550. I was talking 2620 as a possibility. If it's there on the BOE doing nothing, I'd take a stab at that as well. And again, still looking for a top in the dollar against 106.50 in the coming weeks, and still try and be patient with gold, with the miners, until gold finishes this correction. Still looks like a flag to me unless we start closing back above 2340, and the silver similar. A lot of resistance up here at 29.5, but if anything, I would go with the silver, because perhaps this XAU, which also correlates pretty good with the dollar. You see how we had this? I'll teach you a little something. XAU, XAG go up like this in the 4-hour chart. Well, same thing the dollar's doing, right? So the one good sign of the dollar topping would be that this is just a low bear market rally in the gold silver ratio after a drubbing. So a flag. I don't think this is a bottom. Not saying that we can't continue a rally to 82, which was the breakdown, but this is not a bullish structure unless it pulled back down here and started heading up again. This is not bullish. So I want to wish everyone a great trading week ahead. Visualize a constructive week. Can you see it? Okay, well then I'll see you in the room. I don't have a guest this week because I feel it's a critical week, so I could communicate with you guys via video 3 times this week. But also, you want to be checking into the room as I'm going to be posting my ideas of what I just described today, more specifically when I see entries. And I hope that you're learning a few things from Mike and me so that you have more weapons to defend yourself and take advantage of challenging Mr. Market. So don't just count your pips, count your blessings, and I'll see you later in the room or tomorrow with Mike. Adios.